All right, so for Market Minutes today, I have my friend Kelly here with me, and we're going to look at Pinterest. So the reason why I think this stock is most interesting is because we are near a 52-week low right now. And the reason why it dropped here January 26th is because the company announced layoffs. Because they laid off some of their, it'll tell you right here. Engineers are being laid off because they're trying to replace AI with their stuff. So in case you don't know what Pinterest is, it's basically a social media platform. They even have one of their competitors here is Meta. A lot of times users treat Pinterest like they would Instagram, but they view it as more productive sometimes, or maybe even less addicting. And they'll go in and they can make little pages like, oh, I want to get a new tattoo, or I want to get a new recipe. That's kind of how they use it. And what's interesting about this company is that it actually makes quite a bit of money. So we're gonna go straight to their balance sheet, and you can see right here, they're sitting on, and this is in thousands, so they're sitting on almost $1 billion worth of cash. And that's not even including the marketable securities, which is basically just, they have it invested in some fund or whatever. So very, very healthy balance sheet. They have, let's check their debt real quick. They do have some debt, but they could pay off their debt 4 or 5 times with the amount of cash they have, so not worried about it at all. The gross margin is also really good, so we made about $1 billion in just this quarter, and the gross margin is 80%, which is really, really good. It's fantastic. I think it'll probably show that here. But this gross margin where they're making $1 billion and the cost of revenue is only 1/5 of that is amazing. They spend a lot of money on sales and marketing, and you can see it went up about 50,000 for that extra revenue. You can see the revenue went up about 150. The sales went up about 50,000. So that ratio isn't amazing, but it's not anything to be concerned about either. And then you can see their G&A expenses went down. You can see they've been doing a little more research, probably related to the AI and how they can involve it into their platform. And so after they take all this away, you still got a net income of about 58 million, which is great. So as you can see, the company's growing, the gross margin's great. The PE ratio, we'll just look at that real quick. Because now we're going to look at valuation since we know that it's fine. I think the ratio is around 7. Okay, 12.42. I don't want September though. I want it as of today. It should.
Does Copilot's recommendation to buy matter to you at all?
No. So most analysts are paid to be bullish, and to recommend you to buy, because that's how they get you to get into the stock. Yeah. So it's right here. Here's the P ratio 8 right here. 8. So that's really good, especially compared to their competitors right here. This is a really low P ratio. So if it were me, despite the concerns about how well Pinterest will adapt to AI, I don't see any slowing revenue growth. I don't see any problems with the financials. If it were me, I think that if you're willing to wait for a year, I think that this stock could easily go to $30 or higher in a year, which I think is great. So, all right, thank you, and thank you, Kelly, and bye.